Welcome. My name is Len Lane, and I am the founder and president of Brokers for Life, Inc., and we are Dominion Lending Centers in Western Canada. The topic of our podcast will be about what we consider to be real-life mortgage solutions. Welcome back. This is episode 4 of Talking About Lenders. Today, we're going to talk about something that you probably hear about in the industry or in the news, and unfortunately, but it also gets kind of mixed up with what MICs are, what syndicated is, and what private individual lending is by itself. So my guest today is Dan Akowuah, Amansad Financial, former member of the Brokers for Life team, and a long-time friend now, 7 or 8, 10 years. I don't know what it is, but Dan, welcome to the studio.
Oh, thank you. Thank you for having me here. I'm excited to get some conversations going.
Exactly. Let's start with that definition. I know everybody gets kind of confused about what true private lending is. Maybe give us your definition of it, and how did you get started doing that?
I would say private lending, from my perspective, is when you have an individual who owns like a corporation of some sort, and they're lending money and acting like the bank to somebody who needs money but can't meet the bank requirements or an Alt-A type requirements, right? So it's basically people helping people in a different fashion.
So they can be corporations?
Yeah, they can be corporations, right? But especially with the new FinTrack rules, you have to make sure that everybody that is part of that corporation is vetted, right? So it's very important that when you're dealing with individuals who are corporations, you also, in addition to getting their ID verification, you want to verify the corporation and make sure that they're legitimate and so forth.
Right. And percentage of ownership, is that important within that?
Exactly. Yeah, exactly. Ideally, 50%, right? It is like the threshold. You don't want a minority shareholder making decisions.
Spending
right?
the company's money, right? So,
yeah.
So how did you get started in that? You've been doing it now, what, is it almost 10 years?
Actually, it's been since 2012. Yeah, so it's been quite a while. So prior to being in the mortgage business, I worked in the automotive and RV. So I did a lot of retail type lending, right? Then in 2007, when the economy kind of went kaput, right, my income dropped substantially. And I said, you know what, I can't rely on being an employee. So, I started doing some investigating. Because I have a finance background, I kind of landed in the arena of mortgage brokering. And for the first couple of years, I just did the traditional mortgages and the Alt-A mortgages. But I found that to be too similar to what I was doing for 10 plus years in the RV business. And then I happened to come across a foreclosure type file with the bankruptcy all involved. And I kind of navigated through that, but it really opened my eyes to a different type of lending, right? And then from there on, I started basically doing a lot of research, a lot of homework, speaking. I did lots of meetings with Gay Andrews, who used to be with CapLink, and she coached me a lot, and I'm forever grateful for that. And it's kind of built up over time and built up a good network of trusted investors, and that's been my niche ever since.
Yeah, and quite successful at it. We know from personal experience that your due diligence on paperwork and everything is probably above some of the actual lenders that we work with themselves. Not to point finger, but it's so private lending, as I said at the beginning. Private lending, syndication, mix always kind of get lumped into the same thing. But how does this differ from a mortgage investment corporation or a MIC?
Well, the biggest difference is with the mortgage investment corporation is you have like a management team that's managing a pool of money, right? So when they're lending the money, the MIC is the one that is actually registered on title. And as an investor to a MIC, you have basically a percentage of ownership per se, not ownership, but you have a percentage of the profits, right? And you're paying for management expense costs, right? So in the event that a MIC does go belly up, right, as an investor in a MIC, you're actually the last one to probably get paid, right? So from a private lending standpoint, when you're lending your own money, either your name goes on title, right? Or it'll be a trust company, right? So I do a lot of stuff with Olympia Trust, right? So they hold their trust for an investor, goes on title, right? Or it'll be the corporation. So in the event anything goes sideways, you're first to get paid in essence, right? Obviously, there's legal fees and stuff that come into play, right? But there's less risk from that standpoint. However, there's also more risk, right? Because you're the only investor, right? So it's not spread out, right? So you kind of have to weigh out what's important to you as an investor, right? And that's one of the things that whenever I'm dealing with new investors and when they complete KYCs, I have to determine the risk assessment to see if they're even a viable lending partner.
So the difference being that you don't pool money, it's just an individual that you represent in this case?
Yeah. So like on the private mortgages that I do, I always represent the private individual. So I'm looking out for their best interest, right? And I do let borrowers know right from the get-go. If you go to our company website, it actually states that as well, right? And in all the documentation that goes to a borrower, right? So if a borrower comes to me and they are looking for a traditional mortgage, or based on my assessment, I feel that a private mortgage is not needed, right? I'll direct them elsewhere, right? Because private mortgages are only meant to be used as needed, not because, hey, there's a heartbeat on this deal and I can make money, so I'm going to do the deal.
Yeah, and that's has to be the ethical side of that, right? And we've always talked about that it's like, and they should be one step in the process of getting you out to B and to private. And that was a conversation I just had with Home Trust as well. It's like they might be the middle step in something where, private lending and private individuals, using their money, that should be a worst case scenario, right? And then to move the client out through the different steps to hopefully to a regular lender at some point in their time, right? So
in the private lending space, because the mix have gotten so competitive with some of these B lenders, right? Most of the individuals I work with price very similar to the mix. So in some cases, it may be competitive with a B lender. So you may get some borrowers who are like, hey, you know what? It might be a point higher or a point and a half higher, but I don't want to go through all these steps to get a non-private mortgage, right? So sometimes you have borrowers who just want to get it done as quickly as possible because they're worried about the time crunch involved.
Right. So I guess that kind of jumps ahead to another question that we had was, how did high interest rates affect your lender pool?
Not much actually. Like surprisingly, a lot of the investors that I work with are like private lending is not the only thing that they do, right? So they have other sources of income, right? So I never want to work with a private lender where 100% of their resources is invested in private mortgages, right? Like maybe 50%, 25% ideally, right? But for the most part, I would say most of the investors were pretty active and looking to get money out on a regular basis, right? Mm-hmm.
Yeah, and that's good. That's interesting because when you think you could get 9% maybe in some places in the world for interest on your money, but that's not the type of mentality that lender has or that client has for you, right? That they want to be in real estate and they want to be in real estate because it's on the private side, right? So.
Yeah, well, that's what they say is like whenever you're investing, invest in what you know, right? So some of these investors know a lot about real estate and that's where their comfort lies, right? And so they're comfortable with private lending. Some of them have had bad experiences with MICs where they lost money. So now they won't even invest in a MIC, right? And others have been landlords where they've had the worst tenants ever. And they're like, I never want to own a property, but I will definitely lend on a property if it makes sense.
Yeah. Like you mean like the one where I had in Fort Saskatchewan where the guy didn't pay for gas or power for 3 months and had it shut off?
Yeah.
One of those scenarios. Yeah.
Yeah.
I don't know why it took us that long to figure that out, but finally ATCO said, hey, it's getting cold.
Yeah.
Go. Yeah, no, and that's, it's obviously you're licensed in 5 provinces. What kind of difference are you seeing in the due diligence for each province? I know there's quite a shift in the last 18 months to 2 years, where some parts of Eastern Canada, we're more like the Wild West. And of course, we've always been pretty regulated in Alberta as far as who we have to represent, right? So did you see a big shift there?
I haven't seen a huge shift. The one shift I have seen is especially with the new rules that happened in Ontario. That was something that I think a lot of brokers were not excited about, right? And from my standpoint, I was like, yeah, regulate it more. Like to me, like, I'm all about the more rules to protect, the better, right? And to me, to do an extra course to ensure that everybody who's in that space knows what they're doing and they're not just like trying to get a fee on a deal. Like, sure, like weed them out. I'm totally okay with that.
Yeah, that's a good word, to weed them out, because there was so many scenarios that happened, and as recently as last year, this year actually, where there were some big groups that were doing some interesting things. While it's considered private lending, there was the promissory note thing in Ontario. I still can't get my head wrapped around who would accept that. Here's 60 grand without any security. But I promised, like across my fingers when we were when we were kids in school. I promised, and for them to lose the numbers in the 300s of millions of dollars, right? So it's crazy that would be allowed to happen. So properties, anything that the ones you prefer, obviously, are single family homes. I'm taking it. Is there a loan to value cap for you and location?
Well, obviously, I like to align myself with a MIC mentality, even though I'm not a MIC, right? Obviously, but single family homes like duplexes, triplexes, prefer owner occupied, rental properties. Some of our investors are totally okay with that. I'm not totally okay with rentals all the time because obviously it's easy to walk away from a rental, but it's hard to walk away from an owner occupied home that you live in. Right. So many times when a rental is considered, we'll try to do like an inter alia, like a blanket mortgage, where we'll tie it to a primary residence. Right. So there's more at stake. Right. Land. I have done some land deals with some investors, right, depending on location and if the loan to value is like under 50%, right? But just like we've been doing a lot lately is when land is involved, ideally you want to tie that to a primary residence, right? So there's more at stake. As for commercial, don't do too much. We might do like we're working on a sixplex right now, right? So smaller commercial stuff, like I'm comfortable with, right? But when it gets anything bigger, we have a lot. We don't have as many investors who like the really big commercial stuff, right? So it's not an area that I like to dip into because the investors have to be comfortable, and that's part of the KYC too, right? So when we send them a KYC, they have to mark off the types of properties that they're comfortable lending on, right? So the pool for larger commercial is a lot smaller than the single family, the duplexes. Like we'll do condos on occasion, on stratas, right? But I'm not a big fan of it, to be honest, right? Because you've heard about condo mismanagement, right? And that's always a scary thing. Yeah, but loan to values generally when it's in urban is 75% or less, right? But I prefer to do 70, right? Because it leaves room for a future refinance with a different private lender in the event that their exit doesn't work out.
Right. So fees and that need to be considered on the way out as well if it doesn't work out. Location, have you pretty much stuck to the big cities or?
Big cities and direct surrounding areas is primary, right? But rural communities will be considered if it's within a reasonable distance, right? Or if the loan to value is like under 60%.
Yeah, and that 65 and 60 number comes up pretty common, right? With looking at investors. I had one that was south of Camrose, Alberta, which was probably 20 miles out of town, and yeah, somebody had given them almost an 80% loan to value on a private. I'm going like, but I don't know who's going to help you with that, right?
Well, sometimes it comes down to the individual investors, right? So you have some investors that might live in that area and they know that area very well, right? So For one investor, they might be like, well, I don't know that area that well, but the loan to value is good, so I'll do it at 60. But you have another investor who lives in that same neighborhood or very close to. It's like, hey, you know what? If things go sideways and I have to take over the property, it's within managing distance, so I might be willing to go to 75.
So you touched on courses and stuff a little while ago. I think we're going to start to see that right across Canada. Ontario had it started. There are some changes coming here in Alberta, we think, probably in the next 6 to 18 months. Things take time with the government. And that's been one of the ones that has been brought up. How much difference do you think having that level 2 or that private lending course is really going to make for a lot of the people? I'm sure I still see Agent 1s talking about private lending as well when they're not supposed to.
It's so hard to, I guess, like oversee to know who's doing what, because like I do get the occasional referral from Ontario, and then the first thing I do whenever I get a referral is I'll look up the agent, look up what their license level is and so forth. And not because it's going to determine whether I'm going to work with them, because I actually don't take referrals if I don't know the broker individually, right? But just to know what this individual's up to. You know, if you get an age level 1 trying to refer you a deal, it's like, what are you doing? You know, number one, that should be probably going to your principal broker, right? And your principal broker should be reviewing it to determine what to do next. Yeah.
Yeah, and I think that's the oversight of it is always the question, right? And you're not unlike yourself. I don't take anything that's not a referral from an existing client or an existing client sending me somebody, right? So it's the nice part about being at this for so long, right? That we can be a little pickier and choosier about who we actually want to deal with. Where do you see private lending going in the next 4 or 5 years? Things are picking up in Alberta. Is there going to need an extra level of caution? Because prices are going to go up, but you and I have been here long enough to know that they don't always stay up in Alberta. Right?
Yeah, like I think a lot of people in Alberta are hopeful that they see something kind of like the Vancouver, Southern Ontario, people, right? I think there's a little bit of that hope, right? Because people want to see the values go up. People want to be able to access equity, get rid of properties and so forth. But I do think values will go up. But I think as a private lender, you have to be very cautious in moving your loan to value ratios when you see values go up very quickly. I think you have to take that with a grain of salt. Like, you need to see the value stabilize for an extended period of time before you do that shift of loan to value that's consistent with the current values, right?
We've had those corrections in Alberta before. I've seen it. My own properties, right? 98 built a house for $185,000, sold it in Creeks Crossing on the east side of the city for about $450. 5 years later, maybe, right? But still there today. Kind of maybe bumped up and down a little bit. Anything with a double attached garage, you can pretty much right now be bet that it's going to be at least $450 and above, right? So it's that happens. It's a matter of if will it stick, right? So that's a caution. And in the past we've seen the mix have to revalue books because they had all of that stuff in it and in at high prices. There's my wife trying to sneak in. It's a caution, I guess, for investors as well, that you have to be on top of what the loan to value is for things to begin with, right? So
yeah, exactly. And I think it's really important from an investor standpoint is only lend on property that you wouldn't mind owning. If things, right? So if it's a property you'd never want to own, don't lend on it.
Yeah, exactly. You couldn't see yourself living there in the future. No. Yeah. Anything else you would add to that? There's you're the expert in this field as far as I'm concerned. The province of Saskatchewan, I believe, uses some of your actual paperwork for their files now as well. So that's quite a compliment. Any big changes you think that'll happen, or where do you think this is going?
Well, the one thing I'm expecting is for there to be more courses, right? I'm hoping there's more courses. But at the same time, I'm hoping some of the courses that you've done in the past could carry over. So you don't have to do the course again, because the private mortgage course, even though I've been doing it for a while, was like long, right? And I thought about challenging it just to do it. But I'm like, you know what? Maybe there's stuff that I think I know that I don't know, right? So like I like to have the mindset that there's always something that you think you know that you don't know. So be aware of that. Right.
Right. Yeah. And that's a good point, because I know out of those courses, every time I take one, and I've taken every one that MBIBC has, I'm run out of courses for BC after 17 years, that it's like, but every time I go in and do another one, there is something else that you learn something else. Right. So,
yeah.
So
yeah, like I think constant tweaking is important. Like my mentality, especially with private lending, is I work very hard so that I don't have to work hard.
Right.
Right. So you're always trying to make adjustments just to make flow easier, make conversation easier. Like even with the application that I use now, I think I'm on version 38, right? Because I'm always like updating it, saying, hey, you know what? Maybe if I add this will shed light on this. Like even with the FinTrack, for example, with the new changes, adding questions relating to past criminal history and so forth. Yeah, you ask it during the process, but if you could kind of incorporate that right at the beginning and get as much to the surface as possible, then it'll eliminate a lot of unnecessary work, right?
Yeah, and that's exactly asking the questions up front. And that's really what, a lot of the stuff that we saw in the AML, that they are questions that we ask, or sometimes we assume, I guess, maybe that we did. And we have seen a few different ones over the years, but that's going to be another step. And of course, because you're individual private lending, it's obviously more important. Where did the money come from, sort of thing, I'm sure is top of mind all the time. So yeah. Excellent. Well, I know you're a busy guy, so I'll let you get back to work today. I appreciate you taking some time with us this morning. This podcast will be, like I said, probably item number 5. I'll let you get on with your day because your phone's buzzing. So, hey, talk to you soon.
Okay, thanks a lot. Appreciate it.
Thanks for listening today. I hope you found the information that we provided to be useful in your mortgage journey. And remember, you can always find our associates at www.brokersforlife.ca/associates. Have a great day.